Hello and welcome to the Fibonacci free video for Friday, June the 3rd. This is David Starr, and here this evening we will take a look at Amazon as it prepares to trade subsequent to a 20-for-1 stock split here on Monday. Now, what does that mean? It means that trade that's right around 24.50 as of today's close will trade at prices that are 5% of what they are now. So just divide by 20, you're going to get to about 124 or so. If I just do a little quick math in my head, and that's going to mean that any of the fibs that we draw are going to have to be redrawn on the new chart. Now, look, here, one of the things that Henry and I focus on is integrating all of the tools that we have together. That's going to be our classic fib analysis. That's going to be our Voodoo Lines, which integrate several key concepts from Fibonacci, but don't require you to draw all the levels on your chart, and Elliott Wave, which goes hand in hand with both of those other levels-based techniques. And as we take a look at this chart, right, if you would redraw them, then, you know, these levels, which you could draw after, right, after the charts are adjusted for the split, you could redraw them and find other symmetry levels that would be at a relatively similar location, right, or at the same place relative to the price bars, just at prices, 20%. Or sorry, 5% of where they are now, right? And so that means that we'll have symmetry if we look at symmetry to this swing, right? And this swing, and this swing. And the reason I've chosen those swings is that symmetry is often strongest when you're looking to symmetry to levels that are already similar in size. Now, we could add this one in, the largest bounce that we saw in Amazon since its all-time high back here in, just a little less than a year ago. And of course, being the largest, if we added it in, clearing it to the upside would be more meaningful. Of course, clearing all of these others that are clustered together, and the three largest, with the exception of this largest one, I think would also be meaningful. So, if you look at what would be the relative location of 2590, right, just as a rough area, right, and put that lower, it would be useful. We can also see that there are some important levels up near our recent highs this week. If we look at this green line at 2481.75, that would be 161.8% of this last leg down. Again, a decent place to look to if we're going to run out of gas. There's the 38.2% retrace of this move down, which would also be meaningful. But all of those levels would need to be redrawn. And quite frankly, I feel a little lost on this chart without the Voodoo Lines. Now, the reason you're not seeing them is because they've already been adjusted here after the close today. You can see them if I zoom out to maybe a monthly chart here of Amazon. They're already at these lower levels, ready for when charts are showing those split adjusted prices when we start trading on Monday. And so I do have a chart constructed that has the old Voodoo Line levels on them so that you can see it. And the reason I feel lost is, as much as we can draw some of those levels on, they're not tightly clustered, and these levels, which have been stable for years, the Voodoo Line levels in Amazon haven't changed for years, and our two most important levels within the Voodoo Lines are going to be the fire lines, right, and then the tree lines. And you can see that our recent low in here was at a Voodoo tree line down here at 2031. The all-time, or at a fire line, right, the all-time high up here at a tree line, and what we've managed to do is bounce from this fire line and make it to the next natural target and an important decision spot on the way up in here at 24.43. So you can see how good these levels are when they coincide with fib levels. They are even better, but they present us with a really good roadmap, which is why I looked at that last chart and it seemed so bare. These provide us a really good roadmap. Now, they're not going to tell us what to expect right here at the decision point because, as I said, turning up from 2031, 24.43 was the natural place to look for this to get to on the bounce, and we pretty much for the past couple of days have oscillated around that level. If it can find support above 24.43, then the next natural target is 20 call it 2700, right? 2698. You'll obviously need to divide that by 20 to get the level that we'll see here on Monday, right? And if it gets above there, then the real test comes in at 3111. Meanwhile, if it fails here, particularly if it can get back below this 2188 level, then we're probably looking at a retest and likely a break of 2031. So that's what I'm going to be watching here as a roadmap for what next in Amazon. And of course, our Voodoo lines are already set up to be at those levels and give us a roadmap with respect to them to have these very fine levels that have given us very important, well, certainly very important swing highs. Remains to be seen whether this is an important swing low, and it will be first off how we act and which side of 24.43 this decides to break to. And we can follow up next week, look at what the updated levels and some fibs as well here when this is trading at those split adjusted levels. But this is how I will be watching it, and we'll look for what happens next in Amazon, which there will be a lot of focus on because of that split. So that's what I have here for the weekend. I hope you found it useful, and I will see you at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me